This screencast is going to cover accounting for bad debts. Unfortunately, some AR won't be collected by a business. This screencast will cover ways to account for those items. There are two main ways we can account for bad debts. The first is the direct write-off method, and that's recorded when the account is deemed uncollectible. So we would record the original sale, debit AR, credit sales. I'm going to disregard the inventory related entries for this exercise. So that's the original sale. When we find we're not going to be able to collect that, we can't contact somebody, their phone's disconnected, can't get a hold of them, we simply would debit bad debt expense and credit AR. Nice and simple, but it's not GAAP. Okay, so it's not considered generally accepted accounting principles, and we'll talk about why here in a minute. The second way that we can account for bad debts is using an allowance method. And that method records an estimate of the bad debts in the same period as the sale. This is a GAAP method. It honors the matching principle because what we're doing, we're recording an estimate in the same period that the sale takes place. So we're matching up the expense and the sale. The allowance for doubtful accounts, it's a new account. It's a contra asset account, and it's used to record these estimates. So you'll start using this account, and it actually reduces the net value of accounts receivable. So you wouldn't have an allowance for doubtful accounts unless you had a corresponding accounts receivable account. So here's an entry, the original sale, and what I've done here, debit AR, credit sales. This is just a summary of multiple sales, so I can show you how the process works. Then at the month end or year end, whenever you're preparing financial statements, you would record an estimate. This would be a calculated number, and we'll look at the calculations here in a couple of minutes. But to record the estimate, you debit bad debt expense and you credit the allowance for doubtful accounts. And again, this would be an estimate for all of our accounts receivable, so not just for a specific invoice. This would be an estimate based on all of our sales or accounts receivable. Then when we determine that an individual account is deemed uncollectible, we debit allowance for doubtful accounts and credit AR. So that would be the initial account. Contrast this to up here under the direct write-off method, we're debiting bad debt expense. Under an allowance method, we always debit the allowance for doubtful accounts when we're actually writing off the account. Okay, because we recorded the estimate, that's when we debited bad debt expense under an allowance method. So under the allowance method, we've got some different ways we can calculate what our adjustment's going to be. The first one we'll take a look at is the percent of sales method. Bad debt expense is calculated as a percent of credit sales, and the percent used is based on history or the industry average. So you'll be given the percent to use for these calculations. If you were a manager in a business, you would have to determine that, again, either based on what historical write-offs have been or if you have an industry average to use. So here's a calculation. We've got credit sales for the year of 100,000. Historically, we've had to write off 3%. So 100,000 times 3% gives us the amount of the journal entry, which is $3,000. This is the journal entry we would make over here. Debit bad debt expense 3,000, credit allowance for doubtful accounts 3,000. That relates to where we're recording the estimate up here. Okay, so this is my specific example. When an actual account is deemed uncollectible, we would then debit the allowance account and credit AR. That's the individual invoice written off. Let's take a look over here at the T account. So allowance for doubtful accounts, we have this initial $3,000 debit that records the estimate for all of our accounts. And then as we write off individual accounts, we'll debit this account. You see we have a remaining balance for additional write-offs in this example of $2,800. So as additional invoices are deemed uncollectible, we can then continue to use this account to draw it down to write off those accounts. Okay. Another way to calculate the allowance is by the percent of receivables method. This is a two-step process. It's a little more involved than the percent of sales. This calculation determines the ending balance in the allowance for doubtful accounts. So it's a little different focus. First, we're going to determine the target balance of the allowance for doubtful accounts. And this would be by using the ending balance of AR times a historical or industry average percentage. And again, you have to be given those percentages. So we've got the 12/31 AR balance of 300,000. Historical percentage written off is 2%. So the target balance for the allowance for doubtful accounts would be $6,000. Okay, and I've used a little highlighting in color to help with the flow of where these numbers are going. The next step is to evaluate the allowance for doubtful accounts to determine the adjustment needed. So you have to do some analysis. It's not just this number necessarily. You have to then take this number, take a look at your allowance for doubtful accounts. So for my example here, say the balance in there before any adjustment is $2,000. And again, it's a contra asset account, so the normal balance is a credit. I've got 2,000 in there. Our target balance is 6,000. So what do we need? We need a credit of $4,000 to reach the target balance. That's the amount of my journal entry. So this is what my journal entry is going to look like down here. Debit bad debt expense 4,000, credit allowance for doubtful accounts 4,000. That brings my allowance for doubtful accounts to the target balance of the 6,000. When actual accounts are deemed uncollectible, we again debit the allowance for doubtful accounts, credit AR. Okay, individual invoice written off. It's just the calculation of what ends up in the journal entry for the estimate is a little different than what we saw before. Okay. Another way to calculate the allowance is by the aging of receivables method. This calculation determines the ending balance in the allowance for doubtful accounts. So it's similar to this method we use percent of receivables method. It's just a little more detailed. And what we're doing is we're applying the percentages to AR based on the length of time the account is outstanding. So like before, we're going to determine the target balance of the allowance for doubtful accounts. And that's going to be the ending balance of the AR aging bucket times the percent historical or industry average. So again, you take this aging report, and we actually break out accounts receivable by how many days it's past due. That can be really helpful for pursuing collections, because again, the older things get, the less likely we're going to be able to collect them. So we want to collect things quickly if we can, but sometimes we can't. These percent uncollectible again would be based on historical information or industry averages. So you would be given these numbers. So all we do, we just calculate, we take the AR times the percent for this bucket, in this case 2,000, 600, 400, 700, 1,200. Sum all those up gets us to $4,900. That's our target balance for the allowance for doubtful accounts. Again, it's just a little more detailed calculation. We're being a little more precise because not all of our accounts receivable have the same uncollectible percentage. Okay, so sum of all these gets us to 4,900. Again, that's our target balance. So we're going to evaluate the allowance for doubtful accounts to determine the adjustment needed. Again, 2,000 is already in there. We need to get to 4,900 because that's our target balance. So we need a credit of $2,900 to reach that target balance. That's our adjustment for the estimate. Okay, so debit bad debt expense, credit the allowance for doubtful accounts by $2,900. Again, like before, when actual accounts are deemed uncollectible under an allowance method, you're going to debit the allowance for doubtful accounts. We're pulling that out of that account because we've already reserved for it. So now we're just pulling the actual amount out, and we're crediting AR to write off the individual invoice. I hope this has been helpful. Talk to you soon.